Hi, Andrew Bell here, coming to you as we reach the 1/3 mark of the year. Amazing, isn't it? Just how fast it's travelling. There's been a lot happening here since I last reported to you, and a quick update on a number of developments I think is appropriate. First, and one of the strong indicators of the strength of the real estate market at present, is that we have again recorded another in-room auction program with a 70% plus success rate on the day. Now that's 3 months in a row. Whilst we are getting considerably better results than perhaps other agents in the marketplace, the fact is for 3 consecutive months, we've been able to produce results in line with the best markets throughout the country. A statistic to watch is the number of properties sold prior to auction. A week ago, in the lead up to our latest auctions, we had one 24-hour period where 3 properties sold prior to auction for a combined value of just over $10 million. Where the buyers simply did not want to run the risk of losing the properties at auction and made offers simply too good to refuse. Now, this is an indicator of just how strong buyers' confidence is in the marketplace at present. And their fear these days is missing out on a property, and their concern's not so much about getting it as cheap as I can get it. Touching on our Ray White Prestige at Palazzo Versace auction, the results were impressive. There were 7 Prestige properties to go to auction. Now, Wild Ash Street, Southport, Admiralty Drive, Paradise Waters, and Britannic Crescent, Sovereign Islands, all sold prior to auction for a combined value of $9,040,000. On the night, 237 Hedges Avenue sold for $3,350,000. Now, of course, the remaining 3 properties will all sell in the next couple of days from very strong activity. We were that close on 2 of them on the night itself. I will also update you in our next report on the results from our second large in-room auction program of the year, known as the Autumn Selection, where 50 properties are participating. Now, things are always moving very quickly, so let's have a look at some of the key developments. You remember I mentioned in earlier reports that unemployment will be one of the key fundamentals that will drive the real estate market during the course of this year. Well, did you know that since 2010, there's been over 500,000 new jobs created? And the latest figures show that payrolls grew by 71,500, which has seen the strongest start in any year since 1995, may well have the knock-on effect that it will force the hands of the Reserve Bank by starting to raise interest rates perhaps later this year. The other key fundamental really driving the property market at the moment has been our population growth. I touched on this just a couple of weeks ago. Somewhere in the next couple of days, Australia's population will officially reach the 23rd millionth person. We're not sure whether that person will actually be someone naturally born here in Australia or will be one of our migrants. Now, the Australian Bureau of Statistics has released figures showing that our population growth is continuing to accelerate. It was up by 1.71% the year to September 12, which was the highest annual recorded growth since September 2009, and certainly above the 30-year average of 1.4%. With our current growth of about 1,028 people a day, we'll probably hit the 23rd millionth mark around Anzac Day. But one of the key factors here, with the low construction's home, there's no question we're creating greater demand at a time when there's incredibly low construction levels. That's where the impact on the real estate market will show. The other key fundamental, which we touched on just last newsletter, was consumer confidence. It's also continued to rise, up another 2% in March. And we see that our current consumer confidence index is now around about 10% higher than the long-term average, and it's also risen by 17% since April 2012. Australia's housing finance approvals rose by 2.4% in January alone, with a notable increase in investor activity. The number of houses and unit sales in Australia also dropped in 2012 to 256,000, which is the lowest level of transactions since 1996, according to RP data. But this shows the effects of the shortage of stock in the marketplace. And it also suggests that there's been an accumulating number of buyers who've been inactive for quite some time. And with so much consumer confidence, we should see, and in fact we are seeing, a burst of activity with people making readjustments in their housing needs as that confidence continues to build. Household net wealth has also been rising due to the recovery in housing activity and other assets such as the stock market, as well, of course, with the continued high savings rates that have been occurring and the constraint in borrowings. You know, since the mid-2000s, the household net savings ratio has risen from 0 to around 10%. This represents about $90 billion of savings by households annually. And with interest rates on deposits so low, no wonder we're seeing so many people moving back into the real estate market. Another sign of confidence amongst consumers in 2013 has been the biggest spending spurge in 12 years, with retail sales jumping 1.3% in February, which is more than 4 times what economists were forecasting. Those figures come straight from the Australian Bureau of Statistics. Now, I know I was meant to touch on real estate prices this week, but there is a wealth of information coming through from various research arms at the moment. So I thought it better to update you in my next report, and I do like to keep you abreast of all of the latest developments. So I thought it appropriate, with all of those changes I just touched on, to provide that to you this week. Please don't forget, our e-newsletter does provide an insight into a whole range of activities. We're not just limited to residential. We're also one of the largest agents on the Gold Coast in the commercial marketplace, and there's some fantastic activities that are occurring through that particular segment of the market. We're also involved in Ray White hotels around Australia, where we sell more hotels than anybody else in the country. In addition to that, we sell motels, management rights, and pretty much anything with a bed in it, and great investment opportunities there. Our office, of course, was the originator of Ray White Marine, which now operates right throughout the country and soon to be in New Zealand. And it's really interesting to look at some of those great boats that are available. I know many people are interested in that, and there's certainly been a resurgence in the marine industry in recent times. We also like to provide a wealth of other information about things happening here on the Gold Coast. So you're going to see a lot of enhancements in our e-newsletter in the months ahead, and we look forward to sharing that information with you. Don't forget, if you want the latest information on the real estate market as it occurs, feel free to follow us on our Twitter address as shown on the screen. Look, there's no question that the market is moving very, very quickly. And it's really important, I believe, for you to be kept up to date almost on a daily basis. So keep yourself in touch with that Twitter address. Well, I will see you in a fortnight. And what we're going to do then is focus on what's been happening with real estate prices. So until then, all the very best.